Hello and welcome to our weekly review of the crypto market. Last Thursday, July 13th, became a truly remarkable day for the crypto industry. On that day, the US Federal Court ruled out that Ripple's XRP token may not be a security after all. Rather, it met the definition of a commodity when sold to individuals. Although it was a partial win for Ripple, the crypto market still reacted with growth. In other words, the confrontation between the Securities and Exchange Commission and Ripple has entered a new stage. It also became known that the pre-trial proceedings in the case have begun. The Securities and Exchange Commission Chair Gary Gensler has expressed his disappointment with Judge Analisa Torres' recent ruling that XRP is not a security. All in all, that was a remarkable ruling that could have profound consequences for the entire crypto industry. No wonder the news spread with the speed of light on July 13th. XRP surged almost 100% to 0.938 from 0.469, coming fourth in the ranking of the largest cryptocurrencies by market capitalization. On July 13th, the token's trading volume hit over $10 billion. On July 17th, this figure came in at 21% and XRP even surpassed the flagship cryptocurrency. However, the token then lost 22% after the release of additional comments on the Securities and Exchange Commission vs. Ripple case. In fact, the judge's decision leaves the Commission a big opening to appeal. Nevertheless, after a drop below 0.700 at the end of last week, XRP was rising slowly, settling at the level of 0.830 on July 19th and extending its bullish momentum afterward. Naturally, the US dollar has a strong influence on the crypto market. In the reporting week, the greenback was not in its best shape. The latest US statistics revealed a slowdown in inflation, which could indicate that a dovish pivot in the Fed's monetary policy is nearing. Anyway, US dollar index broke the support level of 100 and fell to April 2022 lows. In the past 7 days, the greenback traded below the mark. It was able to rise to 100.3 only yesterday. The best time for the dollar seems to have passed. Now investors are shifting their focus forward towards risk assets, including digital gold. Taking into account the US dollar's inverse correlation with Bitcoin, a fall in the index could boost the value of the flagship coin and other crypto assets. Despite the US dollar's weakness and the hype surrounding Ripple, Bitcoin's performance last week was muted. On July 13th, the leading cryptocurrency rallied and hit 31,700, but it retreated afterwards and spent the rest of the week in a range between 29,623 and 30,423. The world's main cryptocurrency again ended the 7-day period almost in a flat, although it managed to slightly push the highs of the current year. Bitcoin has seemingly forgotten about its direct correlation with equities and inverse correlation with the US dollar. Why did this happen? At first glance, there do not seem to be any major reasons for this. Analysts have identified several factors that are weighing down on Bitcoin. However, in fact, there is only one possible bearish factor: the increasing number of sellers in the market. There have been several major sell-offs so far. Firstly, as the probability of mining is low, miners are selling not only freshly mined coins but also their accumulated reserves. Secondly, the US government has been dumping crypto assets into the market as well. For example, about $300 million worth of bitcoins were sold on July 12 alone. An even larger amount of Bitcoin, amounting up to $4.3 billion, will have to be returned to its clients by the bankrupt cryptocurrency exchange Mt. Gox. These repayments will be made in digital assets, which will then enter the market and will be sold or exchanged for fiat. However, given the daily Bitcoin trading volume of $12 billion, these volumes will not trigger a crypto apocalypse. Even if Mt. Gox clients dump all of their coins, which is unlikely, the market should quickly absorb them. Still, all this does not add any optimism, of course. After all, it will increase supply, not demand. This may push down the price of Bitcoin and negatively affect other crypto assets. Ethereum showed similar performance to Bitcoin last week thanks to hype among market participants. It surpassed the $2,000 mark for the first time since April 23. However, the altcoin also ran out of steam one day later and ended up being stuck in a narrow sideways channel between 1,882 and 1,945 for the rest of the week. Overall, Ethereum gained 10.5% over the past month. Meanwhile, the founder of the Ethereum network unveiled his new plans at the Ethereum Community Conference in Paris. Vitalik Buterin has announced new account abstraction features that could make Ethereum-based wallets more accessible and become a strong long-term bullish factor for the altcoin. According to Buterin, these innovations have the potential to attract 1 billion new users to the Ethereum blockchain. Time will tell if these predictions will come true. The cryptocurrency market is developing rapidly and events can occur faster than previously expected. Traders should always follow the events in the crypto sphere. This was the weekly review of the crypto market by InstaForex. See you next week.